Hey, good morning, everybody. It's Hammer. Today is Friday, August 8th, 2025. I, of course, am here with the Daily Mortgage Rate Update, the only place on the web where you can get together and talk about what's going on with rates and pricing each and every day. Today, what are we going to talk about? What is there to talk about? Well, not a lot of economic data, but I do think rates are starting to creep up, and we're going to talk about why. So I would be locking some loans. We'll go into a little more detail. If you want to stick around, I'll tell you all about it. So anyway, you can join me live each and every weekday morning, 9:30 a.m. Eastern time as we do the show. Is it funnier if I call it a show or a podcast? It seems like everything's a podcast. If you are watching on the replay, don't forget, just give me a hashtag replay in the comments. Let me know that you were here. Don't forget, if you're on Facebook, smash that like button, tag an LO friend, share this post in a group. If you're on YouTube, give us a thumbs up. Make sure you click that subscribe button. Great to see so many of you here this morning. Your engagement helps us grow. Plus, just like hearing from you. It's why I do this. So if you're here this morning, say good morning. And if you would like a reminder that I'm going live each day, you can sign up for a quick text alert at hmmr.io/reminder or use this cool QR code right here. If you're on your phone right now, take a screenshot, go back to your photos. That QR code will work. If you want an email, we send an email each morning at ratelockadvice.com. You can sign up for that. Also, our text alerts at ratetextalerts.com. Check out all of our stuff there. You'll like it. You'll dig it. It's all pretty cool. So let's go ahead and say hi to the live folks, and then we'll go ahead and get started. Good morning, Amy Blauser. First one to say hello this morning. Thank you for being here. Angela Walters, great to have you here. Mallory Fotiadis, good morning. Randy Teakle, giddy up, sir. Mallory said, happy flipping Friday. I'm with you, Mallory. You know what? This week, yeah, I'm with you. So Mike Morano, good morning, sir. Almir Krivdik, good morning. Kenny Rivard, good to see you. Carolina Small, good morning. With some coffee, nonetheless. I think I might even have some more coffee. I think I'm in the mood for more coffee. Tom Dedmore, good morning, sir. Mike Brown, Chris Dickerson, and Deb Dickinson. Got to say that one quick, right? Good to see all of you here. Thank you for joining me. Let me know in the comments, what are you guys doing this weekend? Here's your question of the day. What are you doing this weekend? What are your plans? This weekend? I am going to be working on the barn. I got to show you guys. I got the backsplash of the kitchen done. The kitchen is it's almost done now. So it took me a while because the tile was back ordered, and I do blame that on the tariffs, by the way. But the kitchen is looking great. The barn, I had the electrician come and put in all of the final stuff, but I still have to get the walls up. I'll take you guys for a tour. I've got internet up there, so I will take you for a tour of the barn and show you all what I'm up to and where we're at. So let me know what your plans are for the weekend. Michelle, good morning. A veteran car show. What is a veteran car show? Veteran is in like our military veterans. Good morning, Mr. Mahan. Good to see you. Even though you're late, don't worry, I won't admonish you. So let us know what your plans are for the weekend. And with that said, let's go ahead and get started. Good morning, Mr. Clancy. All right, let me flip this on. So taking a look here, you can see that mortgage-backed securities currently down 8 basis points on the morning. Not great to see that we're down on the day. And you can see, let me zoom in on this. I want to show you guys. I got to refresh it and we'll pull this over. Okay. So you could see a quick recap what happened yesterday. Pricing came out in the morning right here around 10 a.m., right around 100.30. And you could see that it went down through the day, right? Down, that is a frowny face. We do not like to see mortgage-backed securities go down. When that happens, that is bad for your rate sheet. It wasn't really bad enough to get any reprices worse, but we did end the day lower than we started the day. And it was a downward trend. And this morning, you could see that it's more of the same. We're continuing to see some red as it goes down. And I'll tell you what, when you look at the 5-day, you can really kind of get an idea of where things were at on here. When we had a nice upward trend, right? We kind of moved our way up. Again, when mortgage-backed securities go up, that is better for your pricing. That gives us our little smile. And in fact, what I should do is show that in green, because green is good and red is bad. So we saw mortgage-backed securities improving on the day. But yesterday that started to change. And I told you that we were capping out and that we were going to lose ground. And the number that I have been working on for mortgage-backed securities for the technicals, I was at 100.21. And the reason that I was looking at 100.21 comes all the way back here to Monday, March 3rd. Let me go ahead and move the screen and show y'all what I'm looking at here. So hold on a second. Let me get this just where I want it. Ha ha. Good morning, Julie Lawrence. Question of the day. What are your plans this weekend? What are you doing? So taking a look here, you could see that on Monday, March 3rd, and we were at, I'm going to go full screen though. I want to show this to you guys so that you see it real clear. So let me zoom this out a little bit. All right. So when you take a look at this, and I'm going to go ahead and we'll draw a line. Let me use yellow and we use that. So we're going to draw a line just like this. All right. So there you go. That is kind of right here. You could see that we had a strong rally and then we bumped up here and fell back down. Right here, we broke it for a couple of days and then fell right back below it, right? And then you could see that over here, we were testing that level again. And you could see on that day, we kind of came here the day after we were off. We did break above it for one day. One day we broke above it. And then now we're back down below it, right? And when I don't know the fancy names and stuff, but I'm going to tell you what I look for here is patterns. We have this green line here is the reaction to the jobs data. We had a big switch. Remember, we were from down here, this range down here. Now we're up here. What that did is that changes your rate sheets. We were, in the 6.7, 6.8 area. Now we're down in the 6.5. So we improved about a quarter point with that jump. But I was looking for us to hit a ceiling here, and we are hitting that ceiling. So when you take a look here, you will see that mortgage bonds are hitting that ceiling, and now they are starting to fall back down from here. We're not going to go down too far. If I were to look for a level, we're probably over here. But we'll say this is around 99.90-ish. But there's no reason to expect that we're going to improve from here. It's a great time to go ahead and lock up some loans. I would, let me edit the lock advice here. I would lock. Come on. Here we go. Lock. Why is it not typing? Oh, because it's got that on over there. All right, hold on. Lock less than 15 days and risk and less than 30 that don't want to lose ground. Cautiously float longer term. All right, I'm going to put this up on the screen for you so you guys have this. Jerry Avila, what are you doing this weekend? That's the question of the day. What are your plans this weekend? I'll go over plans at the end of the thing. So if it were me, I'd be locking anything that's closing that's closing the next couple of weeks. It's the same thing that I had kind of said to y'all yesterday and the day before. I just don't see a lot of reason to expect. Ooh, I wish you could grab them and move them. But here we go. Right here, it tells the story. That's kind of what we're looking at, right? I don't think we're going to see things break above this unless we get help next Tuesday. We have nothing on the economic calendar for today, nothing on the economic calendar for Monday. That means bonds are going to drift. If we take a look at the 10-year treasury yield, it's currently at 4.28. And taking a look here, you can see that same thing. Now, remember, with the 10-year treasury yield, up is bad, right? Because it's a yield, not pricing. So we've seen a trend this week. It has moved up every day this week. That is not what we want to see. Our best level was right here on Monday. And since then, we've seen the 10-year treasury yield creeping higher. And it's kind of tells the story, right? And then mortgage-backed securities, we see that same kind of thing going on. Let me just pull the bottom of, hold on, let me do it this way. There we go. Okay. So taking a look here, we capped out yesterday early morning and then lost ground on the day. Today we're losing more ground. It's just drifting. Now, what we also want to be paying attention to are what could give us improvement in rates, right? Where do we go from here? Why would we float? Well, right now, markets are pricing in a guarantee to a rate cut in September. Remember, if we get really hot inflation data, that could see even this number slip a little. Let's say this slips down into the 70s, like 75%. You're going to see rates jump on that. They'll jump an eighth of a point if that happens. Right now, markets are pricing in almost a 60% expectation that we'll see a second cut in October. If inflation comes in hot, that's going to drop much lower. The expectation of 3 cuts this year, look at this, 3 cuts, almost 50%. 2 cuts, 42%. It's a tight race right here. If inflation data next week comes in hotter than expected, the expectation of 2 cuts will remain. We won't see less than 2 cuts. It would have to come in really bad for that. But this will disappear, right? So we will go ahead and this would disappear right here. And that means that pricing would get worse. If inflation comes in cooler, how much better could it get? If inflation comes in cooler, do markets believe that, again, we know that we've already got a September cut. What about an October cut? Do the chances of an October cut move higher? Maybe instead of around 58%, maybe they move up to around 75 or even 80%. If we get cooler inflation opening the door for the Fed to cut rates, what would that do for mortgage-backed securities? What would that do for rate sheets? You'd see small improvement. I think there's more risk than there is potential reward right now. Remember, this CPI data comes out on the 12th. And then if we were to jump on the calendar, you're going to fast forward to September 5th to the next BLS jobs data. And that's going to get a lot of attention because of the last one. And we've seen how strong that data can be and how much of a market mover it can be, because if we go back here is our BLS jobs data. Look at this. It was a 75 basis point move. Well, this was because of deep revisions. We've already know that it's a train wreck. So what happens if the revisions that brought us from, and actually I'm going to use MBS Highway because I know that Matt Graham had pulled up that chart I wanted to show. Hold on. What day was the, all right, so that'll be, I'm looking for the, here it is. Let me make this a little smaller. Okay, so taking a look here, this is, Matt Graham had the payroll chart up, the one I was looking for the other day. So taking a look here, this was our big thing, right? In May, we went from 139 as a print. That was what we came out with and what markets reacted to. 144, it went up on the second revision. And then all of a sudden drops to 19. This just doesn't make sense, right? How do you go from 139 up to 144 and down to 19? And then June's numbers, 147 down to 14. I don't see this. I just think something weird is happening here. I mean, look at this. We know it went down and then it came up a little bit, right? It went down even further. This is a big jump, but I mean, that's it, just into the teens is crazy. And then 73. So this is, the lower this number, the lower the number of jobs created, the more projected weakness in the economy. What would we have to see for an August number? I know you can't see the yellow for this, but what would you have to see for an August number to see this, go lower. How much could this be revised? What if 73,000 gets revised higher and this turns into, 130,000? And again, especially, let's not lose track of the fact that Trump wants to manipulate this data. He wants his ego. He wants it in there. So let's pretend that it goes here and 14 all of a sudden goes back up to 130. And now you've got a big jump. Well, that's going to shift everything that just happened. So there's so much going on over the next couple of the next month, basically, starting with the CPI data, the jobs data. I would be locking anything closing the next 2 weeks. I would not risk these rates floating. These are some of the best rates that we've seen. I mean, 6.5-ish. We're hanging right around that 6.5-ish mark. Let's go ahead and don't get greedy. Let's go ahead and take that. And loans that are closing in 30 days, I would probably look to be locking that even ahead of the CPI inflation data. It's just because of the risk. So, but that's me. That's me. Mike, gerrymandering the numbers, it's political. Yeah, definitely it is political. Need Pulte to stop gaslighting America into thinking Fed cuts equal mortgage rate cuts. Y'all know how I feel about Pulte. Pulte is an imbecile. He's an absolute imbecile, and I'm not the president of the United States, so I can say things like that because I'm an influencer, an outsider, a talking head. So yeah, he's an imbecile. I think Bill Pulte is an absolute moron. So anyway, there you go. I think we're kind of capped out is the bottom line. I would definitely be locking. That's it. We'll kind of wrap it up with that said. So let's go ahead and talk about what are you all doing this weekend. Let's see. I'm going to go to your comments here. Question of the day. Michelle is going to a veteran car show. Chris Dickerson tagging some LOs. Thank you, sir. Appreciate you. Randy Tico working on a new fish pond. Awesome, dude. What kind of fish are you doing? Are you doing koi or something different in there? A fundraiser for a veteran charity. That's awesome. Awesome, Michelle. Mike Brown, weekend include yard work, golf, a birthday party, and a brake job on a friend's car. Got a lot going on this weekend, my friend. Yeah, I got to do an oil change on the Jeep. That reminds me. And I'll rotate the tires. Amy Blauser, golfing in the Night Glow Golf Tournament. Well, have fun with that. Hit them straight. Always a good time. That's good. And then nothing as usual. Maybe bring wine to one of your agent friends' open house, hang while you try to sell our listing. Did I enjoy Trump yesterday talking about jobs? I missed it. I'll have to go back and look. I missed it. I don't enjoy Trump talking about most things, actually. I have to be careful. Like I saw something on Facebook where someone was like, oh, if you're a friend of MAGA, unfriend me. And they're a vendor of mine. We pay them $6,000 a year. It makes me just remember. Be careful what you put on your socials. Like even though I'm not a big Trump supporter, just hearing somebody that says that, it's like, we do business. Like I don't care about your political views, especially she's not even an American. But makes me laugh. Semi-pro soccer game and family game night. Very cool, dude. Hope that is fun. Getting rid of excess tools, building a storage shed. Man, you are busy out there. Yeah, Amber said it's been done forever. Look up the largest BLS revision in history. Yeah, well, what's funny is they revise it through the months and then they revise it again at the year. It's even funnier. Putting up dividers for a new chicken shed. Chickens are nasty, aren't they? I'll tell you, the one thing I wouldn't want. But anyway, well, I hope you all have a fantastic weekend. And again, it's going to be slow on Monday. There's not a lot of economic data. Most of the action is going to be on Tuesday. And, if the inflation does come in cool, the tariffs don't show up on, remember something, the tariffs are definitely having an effect. They're not paid by other countries. They're being paid by American businesses and American consumers. How much of that's going to make it into the data, though? That's the thing. How much of that is going to make it into the data? So call me a skeptic, Deb's got family in town. Well, have fun with the family, Deb. So, all right, y'all, I'm going to wrap it up. You guys have a fantastic weekend. I will see you on Monday. Have a great one. Bye-bye.